Panic stations, everyone. House prices have fallen, which means everyone is immediately going to put their house on the market and sell it cheaply before the fall continues. Literally no one is doing that. So why would you do it when the stock market drops? What amazes me is the way that both buying a property and investing in the stock market are almost identical to each other, yet so few people treat them the same. I think a lot of it is the generational shift. The boomer generation benefited a lot from buying property and growing wealth through the rise in property prices. But the modern day generations, millennials, myself and onwards, our golden ticket is a stocks and shares ISA. I want to break down some of the similarities between the stock market and the housing market. Firstly, they are both assets. When you buy into stocks and shares, or whether you buy a property, you're buying something that in the long term should grow in value. Now, neither of them are guaranteed to do that, but both of them statistically probably will. You've also got to look at the fact that in the short term, the stock market and the housing market can go down as well as up, but in the long term, both trend in one direction. Both have the same levels of risk associated with them as well. So yes, you could go for a high risk property that's a renovation job where half of it's got subsidence and falling down. Equally, you could go for a high risk stock by investing in a tech firm that no one's ever heard of, hoping it will be the next Nvidia. But equally, you can go for a low risk property that's ready to move in, like you can buy an ETF that tracks the all world. I'm not asking people to pick one or the other. I'm saying they both behave the same. So why not do both? Own my own property when I go into retirement, knowing the roof over my head is paid for, will be a massive relief. But equally, investing has its benefits. You don't need a huge deposit to start investing. You can invest from as little as £1. And also, investments can give you a passive income through dividends or the 4% rule. And if you use a stocks and shares ISA, that will be a tax-free income. If you want to learn more, then follow JP's budget, where you can get better with money.